Jamie, excited to be here with you today. We're going to be tackling a little bit of a myth, I think,
Yeah.
really in the world of offshore banking, offshore investing, and we get this question. I'd be curious to know how often you get this question. I'll ask the question first, which is, does an offshore bank account or opening a Swiss bank account trigger more IRS scrutiny or an audit?
I think it's not one of the most frequently asked questions, but it comes up regularly enough that I think this video is worth our while, because I do get it. I would say a few times every year that someone asks, like, hey, is this going to trigger an audit? Like, is this going to look suspicious to the IRS? Because obviously, like, no one wants to have beef with the IRS. We want to do things properly. We don't want to have any unnecessary audits. So I understand that that's a question. And I mean, we always say it makes sense to think about tax consideration, to make sure everything's reported properly, pay your taxes on it, do it all the right way. So I think it's good that people are thinking about the consequences of setting up an offshore bank account.
Absolutely. And I want to say this to the audience, so I'm going to look directly at you. Always consult a tax professional. We are not tax professionals. So we have a network of tax professionals if you want to reach out to us that we can put you on. But this is not tax advice in any way. But with that, I think it's important, as the question that what it is, when you look at the IRS, this is open information on the internet you can find. They're really looking for people who are like inconsistent in reporting, domestic or international. Right. These counts are FATCA compliant that we're working with. We encourage and make sure that our.
Maybe I have to say what FATCA is.
Okay. Maybe you could do it. Yeah, you can jump into it. Yeah, that's all right.
I just think it's important. I mean, we do
Yeah,
this every
absolutely.
day, and
True,
not everyone
true.
knows all
My
the
bad.
abbreviation.
Yeah.
So FATCA stands for the Foreign Account Tax Compliance Act. It was a law that came to fruition under the Obama administration due to like the tax dispute the U.S. had with various countries. And it's important that your offshore bank account is in compliance with this Foreign Account Tax Compliance Act.
Yeah, absolutely. And so what's interesting is that that act that came about, you're always supposed as a U.S. person to report to the IRS. Your worldwide income, your worldwide assets, the U.S. has always had that. Doesn't matter where you live in the world. One of only 2 countries that do that. But if you're, for instance, if I'm living in the U.S., I have to report worldwide. But if I'm living outside of the U.S., I still have to report worldwide.
Absolutely.
As opposed to a country like Switzerland, where if I'm living in Switzerland, I report my worldwide assets. But if I move away from Switzerland, then I don't have to report to the Swiss tax authorities anymore. I report to the tax authorities of the country that I'm living in. So
Yeah.
residence-based taxation versus citizenship. So that's kind of the difference. And so when the IRS is looking, they're from what you can read online, they're looking for like discrepancies. Like, are you reporting it? When it comes to kind of looking at the broader picture, they are really like, the IRS is really there trying to find bad apples. Now, the caveat to that is, with the FBAR, so the foreign account bank account reporting system, is the penalties, if you do mess it up, can be outproportionate than what the penalty could be. For instance, the rule is if you have more than $10,000 in any various accounts, not one account with 9,000, one account with 5,000, that combined value is over 10,000. So you have to report both bank accounts. It's not per bank account, it's total assets overseas. So let's say you opened a bank account in a different country and you had $1,000 into it, but you never really did anything with it. And then you had other banks and other places and had a substantial amount of assets outside, but you forgot to report that. They could come back and say, hey, you didn't report that. And we don't know how much money has been in there. We haven't been able to track it. And so there might be a disproportionate penalty for that, $1,000 sitting in that account. So it is important to be very detail oriented, and why we tell all of our clients, look, make sure you're working with a CPA who has international tax experience, who knows how to report this in the US. We work with banks that are going to have those tax statements, so it's going to make it easy for those people to report that. And I think as long as you're straightforward in reporting and consistent and not making mistakes, it's not really going to trigger more scrutiny. any more so than if you were being inconsistent in a U.S. domestic situation.
Yeah, absolutely. I think that's what it comes down to, right? The question was, does an offshore bank account trigger an IRS audit? And we can only speak from our experience. I mean, we have no inside knowledge into how the IRS inners working go about. But in our experience, we have been doing this for almost 35 years now. We have not seen any of our clients being audited based on the fact that they open up an offshore bank account. So I think we can say, in our experience, having an offshore bank account is not going to increase the scrutiny from the IRS because it is a legal vehicle to use.
Yeah.
The US doesn't mind you using that. There's a lot of valid reasons, and we have a lot of videos where we talk about the reasons why people set up an offshore bank account, and tax evasion is not one of them. So if you report the bank account properly, you work with professionals that understand international taxation, international bank accounts, you should be fine.
Yeah, I think that's great. And I think we've covered it very well. I think the only final point I'd say, if you are trying to evade taxes, don't write us. All right.